What's up, guys? Welcome to another episode of Invest with Obi. I got my good buddy of mine, Jesus Padilla. He's at LA City Fire Department, and I'm very privileged to get to know him. He's doing some amazing things in the real estate investing world. You know, he's doing some private money lending, buying properties and whatnot. Jesus, man, thank you for being here.
Hey, what's up, Obi? Thanks for the nice intro, brother. How's it going? How you doing, man?
Good, brother. Good, man. You know, just trying to make $1 out of 15 cents, trying to pay the rent.
Hi, that's what's up, man. Well, I'm glad we were able to connect here in Boston. Is that the first time we connected in Boston?
Yeah. Went to Boston.
Yeah, nice, man. So yeah, I'm glad that we're doing this for other first responders as well. You know, and I think we have a common ground, and we're not. I don't think we're that special, right? We just chose a different field, and now we're investing in some other opportunities, right, for our families, for our kids. So
even for our friends, man, you know, I'm glad you mentioned that because it's something that's been in my heart for some time, you know, and I'm glad we're able to connect so, you know, we can show our brothers, right? Not just firemen, right? But just, you know, people that we know that are in the field as well, like cops, right? Nurses, teachers, that, hey, this can be done. You know, so I mean, I want to talk about, you know, some of your wins that you've had, because I know you've had some, and you're doing private money lending now, you know. So I kind of want to talk to people about, you know, like we're thinking about possibly doing some private money lending. Like, what are some things that I guess you've done, how you got into it, right? And if you can kind of talk about maybe like one of your deals or whatnot.
Yeah, so let me let's step back a little bit. I'll tell you a little bit about myself and how I even got to real estate investing in general, and then we could talk about like private money lending or how does that stuff. So more than happy to share that with you. But is that cool? Give me a little bit.
Let's go.
Yeah. So I actually started investing in real estate about 4 or 5 years now, and I got a couple properties out of state. I live in Southern California, so I got into real estate on the traditional way, right? I bought 2 properties, couple properties here the traditional way, and then I hit a ceiling, right? I was like, oh well, I didn't know I could run out of money that quick, right? Putting 20% down and this and that, right? I didn't know anything about creative finance or nothing like that. So then I kind of like just stopped, right? And I thought by owning a couple properties, I was going to start building that generational wealth, right? And little did I know about other strategies on how to get properties, right? So I joined Sub 2. I mean, even before joining all these programs, right? Mentorships, you know, my wife and I, we went to like multi-family mentorships, public storage, tax liens. I mean, there's all these people out there that's trying to sell their course or whatever. Then obviously we went through all that stuff because we were like, man, how do we get out of this rat race, right? I mean, being a firefighter, first responder, or whatever, it's great, right? It's a great career. It's a high-paying job or whatever. Yeah. But you know, it is physically and mentally demanding, right? Yep. So I wanted to. I kind of the reason why I got into real estate was because I wanted to have something for my family, right? Build that generational wealth for them. So that's kind of how I started. And then I joined Sub 2, joined Gator, obviously now part of being an owners club. Within the last 2.5 years, I learned about how to be a private money lender. And I did private money lender, I did private money partner, things like that. So I was like, oh, well, I love what I do, and how can I leverage my high income W-2, and how can I put that into getting some type of passive income, right? So I started learning about, you know, transactional funding. I started learning about private money lending, private money partners, and things like that. So I definitely have some good experiences, and also some lessons learned, right? And that's kind of how I got into that. So yeah, I mean, is there
what would you say to somebody that's like, okay, or let's just say one of your buddies, right? Hey, I see what you're doing, man. Like, how do you do it? How do you get in? What's because I get a lot of the same questions, like, isn't that scary? What if you lose your money? Like, what are some, I guess you could say, some safeguards, securities and stuff like that you put in your lens?
Yeah, I think for me, at the beginning, you know, I was probably had the same exact questions, right? Of like, hey, what's gonna happen if I lose my money? What's gonna happen is you're gonna have a ton of questions. It's always that first deal that you're going to ask 1,000 questions. Is it bad to ask those questions? No, it's not, right? Like I think you're better off asking those questions up front end, whether it's a family member, friend, coworker, whoever, teacher or whatever. And if they even get to like think about doing this, being a private money lender, well, like they always teach us, right? Well, for the first deal, maybe be that fly in the wall, right? Just like, because I've been on the two sides of the spectrum of being a lender. I've been on the borrowing side and also being on the lending side of being as a lender, right? And on the first deal that I lent on, I mean, I had a ton of questions. I didn't know what was what paperwork, what's this, what's that, what's
interest rate charge,
what's all that stuff, right? So, but I think that one of the most important things is this. I think you have to build a relationship first, right? You have to build that relationship first, whether you're asking or you're seeking funds, because the reason why is, for me at least, as a lender, I want to make sure that borrower is going to protect and treat those funds like if it was my grandma's funds. Like, we work a lot for those funds, right? And I'm not talking about, and I just want to make it clear, and I'm not talking about like leveraging credit cards and this and that. No, I'm talking about my personal funds, right? Like this is my life savings. How are you going to protect that? And if something does happen, right? Because it's real estate, I know it's risky, right? How are you going to, what's going to be your like, what happens?
Securities are you giving me, basically?
Exactly. Right? Like I understand now, being into this for the last 3-4 years now, it's like, okay, I understand this risk, right? But there's always protections along the way as well, and building that relationship with people, I think it's way more important than the dollar amount. Building that trust, like I said, and communication, right? I think for most of the deals that I've done as a lending side, I think communication is key. Where this is let's just put an example, right? Let's say it's a fix and flip project. You bought it at the right price. You're putting rehabs and doing all this stuff, right? But as a lender, I mean, I'm not really involved on I don't have no say on you're gonna put granite versus whatever. Oh yeah, right. Like, but at least the borrower is communicating with me. Hey, this is a project. We're like 50% done. We're 75% done. And I think that's the communication piece I'm trying to convey, of like being a good borrower, and also like you want them to communicate that with you, to be like, okay, cool, that's awesome. I mean, I don't like, at the end of the day, I'm just want to be able to get a return. How am I protected, and build that long-lasting relationship, right? So I think that's kind of key on the lending side. But I think at the end of the day, I think it comes with building trust, have great communication, networking, and keeping them your number one, like your number one priority, right? Having those funds as your number one priority for them.
Yeah. So I'll add to that, right? So for those of you that are watching, things that I know that I do, and I'm sure that Jesus will say the same, right? It's like, okay, well, there's things that we do to safeguard ourselves. One is, okay, getting to know the investor himself, right? And it's not just like, hey, let's go out to lunch. It's like, hey, let's have a sit down Zoom conversation, right? You're literally going to date this person first, right? And then you're going to also, hey, you're going to be pulling credit. You're going to background check, right? You're going to see what things he has to use as collateral. Some of the things that I've gotten as collateral is other properties. Hey, if he defaults, you can have these properties, right? So, and these properties will add up to, in my case, I actually got, I lent out 75, and I was able to collateralize, in case he did default, over $100,000 in properties, right? That's the flip property and then 3 other properties, so just so I can feel comfortable. Mm-hmm. So those are like the type of borrowers that you want to deal with, like people that are like, hey, listen, I want you to feel comfortable. And then there's a lot of other stuff too. You can literally use anything as collateral, a watch, another house, a car, right? But all that stuff has to be written. And, everything's done through, of course, paperwork, right? Attorneys are involved, right? Title companies, right? All this stuff. There's safeguards after safeguards after safeguards. And yes, can things happen? Yeah, of course things can happen, right? But that's why you do all these things. That's why you date the borrower before you actually do it. You get all these things to make sure, okay, you know what, he's credible, right? And the biggest one is, personal security. You know, he gives you a personal security that, hey, something happens, I'm gonna get you your money back. So one of the lessons that I've learned was I almost lent. I'm not going to say any names, but let's just say I almost lent some money on a deal that came from my marketing, right? I partnered up with somebody, and unfortunately, she ran away with the deal, right?
Hey.
But I was going to lend about $270,000 to get the deal. Some people would say, well, you lost a lot of money. No, I didn't lose money, right? I actually saved myself the $270,000 because she basically stole about $40,000 that was supposed to come to me. But at the end of the day, I don't see it that way. I see it like, hey, listen, I paid $40 to get rid of somebody, right?
Yeah.
I still kept my $270. So I mean, I'm a strong believer in the higher, higher being God, right? So I'm like, he was watching out for me. So those are things that you have to do. I safeguarded, and I got lucky. I got lucky because he was watching out. But I had hints. Hey, don't do it. I'm like, you know what? Let me do it.
It was your hairs in the back that were talking to you, and we didn't listen, huh?
Exactly, bro. I'm like, hey, listen. And I listened. I'm like, all right, step back.
Yeah.
Right? Step back. But hey, lesson learned, right? I literally could have lost, but I didn't.
Yeah. No, that's good. I think a lot of people, and it's a good way that you put it, right? I think a lot of people will say, hey, you lost 270,000 or you lost 40,000, whatever that amount is. A lot of people see it that way, right? But I think being in this side, as far as the lending side, I think we see it as a learning experience. Hey, if for example, you're 40,000, I'm sure you probably already made that plus more,
Thank God.
So, I think when people are in those situations where like, oh, well, I think I'm gonna lose this much, or you lost this opportunity. Maybe it's God or whatever your instincts of telling you, hey, you're probably gonna get a better deal or a better return later or whatever.
It's true.
You have to go through the experience. Have I lost money in lending? Yeah, but like I said, I don't see it that way, right? I think I see it as a learning experience and how am I going to be able to learn from it, and I'm not going to do it again, right? So we could touch a little bit about that, right? I think.
Yeah. Let's talk. Listen, it's always good to hear about the wins, but I think you learn so much more from your losses.
Yeah, and that's kind of what I was going to bring up. I think your losses or I wouldn't consider, like I said, I wouldn't say losses, but I think for the normal people or for the general public, I think they will say loss, right? But for us, I think we could say learning experience, right? Or learning.
Yep.
So one of my learning things was I was going to actually in my backyard here in SoCal, I was going to lend about $50,000 to be a private money partner, right? Now, mind you, that it's different from being a private money lender, but being a private money partner, I was going to get 25% of the asset, 25% of the business.
Okay, hold on, Jesus, because I want to make sure that people are following. What's the difference between the private money lender and the private money partner?
So the private money lender is like, hey, I'm going to get a 12% annualized return on my investment, or 10%, whatever it is. You don't have no equity stake. There's no like cash flow, whatever. You're just getting an interest rate, or however you guys will work that out. But there's no, or however you structure it. But there's no like, you're not getting like equity.
You're getting ownership in the property. You're not getting any tax benefits or anything.
No,
you're just like, hey, here's money, I want to return.
Yeah, here's money, I want to return. And why do a lot of people choose to do that? Well, because I don't want to be involved on I just want a healthy return, right? Like, here's 100,000, give me 12%, give me 10%, give me whatever, right? However we structure the deal. And I just want to sit back because I still have a W-2, and I don't want to be involved on the headaches, right? I don't want to be involved on, hey, the GC didn't show up today. Hey, this and this and that, or whatever, right? Like, I'm not
I want to touch on something because, I think the biggest thing when it comes to the private money lending, right, is like, hey, you're getting 12%, but it's 12% within 3 to 6 months. So if you were to do three months, you're looking at over almost 50% return.
Yeah.
You know?
Yeah.
So that's,
Yeah.
I really want to touch on that, you know, because you can get 12% 12% in 6, or 12% in the year.
Yeah.
Right.
Yeah.
So,
man, I was doing some again, this is different from being a private money lender, right? I was doing transactions where I was getting 30% every single month.
yep.
So are those opportunities out there? Yeah, 100%.
Yeah,
You know,
all
it's
day.
just, again, that, you know, that's what I was doing. I was able to make those connections, those networkings, building that relationship. That's what I was doing, right? And I mean, you times that by 12, that's like over 300%.
ROI.
Yeah, ROI on your investment in a year. The banks are not even giving you not even a percentage of that, you know?
No, at all.
So yeah, I mean, I think that's, you know, like I said, you have to structure it in a way that it makes sense for both, right? The lender and the borrower, whether it's a 6 months, 12 months, big project, small project, whatever that thing is, right?
Yeah. So then the private money partner is what?
So private money partner, in the way we end up agreeing was, I was going to get 25% equity on the real estate, which obviously for tax purposes, but also they were going to, I was going to get 10% of the cash flow, right, of the business, which is, on this case, they were going to be a sober living property. And I think they were going to do like 8 beds or 10 beds or something like that for sober living. So at that point, right, for me, I was not getting interest, right? Like as you would as a private money lender. My benefit was I was getting a equity stake, and also on the business side, I was getting a percentage of the cash flow, right? So for me, it was like long-term play. You know, if like you know, I was gonna capture my entire investment within a couple of years, but after that, I was still going to receive that, right? So in this one, you know, I was new to the lending side, and I didn't know too much about protection, right? I didn't know too much about like paperwork and wiring funds, right? So I do want to say this: if anybody, whether it's me or Obi, telling you, hey, wire some funds to my account, run away.
Nah.
Run away.
No way.
Yeah. So because again, I've been on the borrowing side too, and I want to make sure that like they feel as protection as to the top as possible, right? So again, I was new at the lending side, right? And so I was, like I said, I was going to lend $50,000. It was a creative deal, right? A sub 2 deal, but that it was going to cover arrears, closing costs, renovations, even the EMD was going to cover that. Like it was $1,000 EMD. Even all that, all my funds were pretty much, the partners that I had were going to come up with zero money out of their pocket, right? Totally fine, you know. So like that's okay. I was fine with that, right? But where the red flag started for me was, okay, they wanted me to pay the arrears outside of title and escrow. Can it be done? Yes, it could. 100% could be done. I did it. But is that the right thing to do? Is that the most moral right process, or however you want to put it? Is that how you're gonna do your first deal with your partner? Probably not. Probably I would say not, right? And again, I didn't know about this, right? And they referred back to, oh well, X person did it, so it should be fine, right? And I was like, man, but I still had a lot of questions, thoughts, and concerns and stuff like that. Oh, don't worry, we're gonna have a transaction coordinator on this or whatever. So, okay, cool. So what I did, I ended up wiring about $20,000 for the arrears, and actually, it was $20,000 total that I end up that was covering the arrears, and also like I think a month or two of the monthly payments, right, to bring that a reinstatement loan or whatever they call it. So we opened up, you know, they opened up an LLC. They opened up actually 2 LLCs, right? One for the property, one for the business. And it was during COVID, right? Which I was fine. I was totally understand about like, hey, the lag time and this and that. So find out that this property has additional liens on the property. So I'm like, I don't know what the total amount was, right? But that was going to affect how much we're gonna actually put in this property, right? Our numbers are gonna be a little off. And on top of that, by that time when I already paid the arrears and actually paid an additional month to cover the next payment mortgage, I asked for the paperwork. I was like, hey, where's the paperwork? Where's my protection at, right? And that's when like it started going one thing after another, where I was like, shit, where am I where's my fund? Where's my protection here? So I told them, hey, we have we have an additional lien, blah blah blah. And I don't have no protection. I'm not funding anything more. I'm not wiring no if we don't get this issue fixed, right? And the only thing I got was a promissory, and that was after. So before I get into that, right? I think there's a couple of things, obviously, I think for your audience and even for my audience, whoever wants to listen to this in the future,
this is good, man.
is I think it's how do you treat your partners, right? Long story short, I end up learning on how not to wire $20,000 and learning how to have those paperwork in place before everything must go through title and escrow, right? If you're in an attorney state, then obviously you go through the attorney or whatever. I found out months later that they closed on this property that I paid the arrears on, and that I paid the like, I think it was like month or 2 months of monthly mortgage, that they end up closing on a different LLC.
What?
Yeah. They end up closing on a different LLC. And I don't know what this is obviously now I can see it on public record, right? Obviously I have the address, I have all that stuff. But they end up closing on different LLC. I'm not sure who they use to bring in the rest of the funds or whatever. But I that was a $20,000 lesson for me, right? Because I to this day the only thing I have gotten back is $1,000 from that $20,000 fund.
But
yeah.
Okay, so you basically are only put in 20 then. You didn't put in the whole 50.
I did not put in the 50 because I didn't have. I started getting like I mentioned, I started getting the red flags, right? Like, okay, where's my paperwork? And I was waiting, nothing. Okay, when are we what is this additional liens, right, of the property? How is that going to affect because these people, I highly doubted that I even had $2,000 in their bank account or $5,000 or whatever. I'm not saying in a bad way. I'm saying in a way that I don't think they were going to have the enough. Be like, hey, I told Jesus that $50,000 was going to cover everything. How am I going to tell him that it's going to add up another $10,000 or $5,000, whatever that amount was, right? So that's kind of what happened with me on that experience. But
okay, so that was a lesson. That was a huge lesson, right? Mm-hmm. So would you say you're much better at private money lending now?
Oh, 100%.
Right?
Yeah.
So that lesson was actually, honestly, in my opinion, was a cheap lesson.
Yeah. Well, yeah. So that is one of 3 other lessons that I had, right? Yeah. That I have in my Rolodex. That I lend money out, and right now, I'm still out. In addition, 1, 2, 3 other deals. Yeah, 3 other deals that I'm part of. That has been over a year.
But those things won't happen again.
No.
I'm saying, because now you're a seasoned vet. Like,
yeah.
Right,
so now
I got
the
proper paperwork. This is what I need, right? So now you're like, okay, well, yeah, it's not gonna happen again, right?
Yeah.
So you're running into bigger deals now.
Yeah.
You know how to underwrite better.
Yeah.
So
and now I bring everything to, even though they say trust but verify, right?
Of course,
for me now, I'm gonna take it to my TC. You're gonna pay my TC fees and all that stuff, right? Because
you really believe in this deal, right?
Yeah, you believe in your deal, right? This is your deal. Oh yeah. Okay, well,
let's go.
Then you should have no problem. Having my underwriter, my team, even me, right? Having another extra set of eyes looking at this deal, right? So now, for me, is I'm thankful that you have your own transaction coordinator, but I have to bring it to my other sides and stuff like that. Hey, I have no problem. I think if they say, well, I'm not going to pay for your TC, okay, then That's
then
fine.
okay. I guess we're not doing this deal.
Then I'm okay. You know.
Yeah, you should know
But,
better. So
yeah.
listen, dude, I appreciate you for being vulnerable, man. You know, people are not, cool about talking about their losses, especially when it becomes the money.
I think it's super important, right? Because you're gonna learn more. Like, I think we said this already, right? You're gonna learn more for your losses than your wins. Win is a win. You're just gonna go do it again and again and again, right? And like I said, I was making 30% returns monthly on the money, because I was doing some EMD, some transactional funding, right? That's how I started, and I was doing pretty well with one borrower doing multiple transactions.
Sweet, that's all you need, just one.
Exactly, and that's the point, right? Like, because I've been on the borrowing side too. I'd rather have one person to do 10 plus deals than doing 10 different people, right? And I think that's where relationships come in play, and long-term relationships come in play, because let's say me and you are in a deal. Well, we successfully did this deal, right? We both underwriting, we both did the protection, like all this other stuff, right? Like the stuff that we always talk about. Well, what's gonna happen when we're done? Whether I'm your lender or you're my borrower, I'm your lender, or hybrid. Well, guess what? Hey, Obi, do you have another deal, bro?
Yep.
Can I lend you another $50,000?
Yep.
Right?
Yep. You got that trust with them. You already built that relationship.
Yeah. And for me, it's gonna be like a no-brainer. Obviously, I still have to vet the deal. I have to make sure that the due diligence still gets done, and the paperwork gets done.
To touch on that though, like those people, right, that you've already done, they already know how you like things done, how you like things presented, right? And the way that I learned was through a buddy bag. We're actually friends now, So I started with a buddy of ours in sub 2. His name is Ricardo Obregon, right? Super cool dude, right? Love him to death. So I wanted to build this relationship with him. I'm like, I want to build this relationship with this guy. I've had conversations. He's taken the time off the phone to call me and talk to me about a couple of deals, blah, blah, help me underwrite. But you know what? I want to build this relationship with him. Dude, lend him on a deal, right? Taught me so many things. He's like, this is how you want to do things. This is the way you don't want to do things. He literally watched my back through the whole thing, right? So fast forward a year, I lent him the money for a year, right? So the deal was that, hey, listen, if we cannot cash out, refinance you out, right? We'll cut you in on the deal and we'll still pay you your percentage, and you'll get 33% of the deal and the cash flow. Nice. Because there's 3 people involved. Dude, not that many people are doing that. You know what I'm saying? So came in on the deal. Now I own part of the deal. It's like a 4-plex, you know what I'm saying, in Alabama. I'm getting, 33% ownership, 33% of the cash flow, and I'm still getting my, 15% that I lent him on, right? Mind you, I could have lent it to him for less, but I'm like, well, I just want the relationship with him. I'm like, you know what, dude? It's not a loss, it's a gain, a huge gain, right? But could have used that money to lend it more? I could have made probably like 50% on that money. But I'm okay with it, because you know what? I wanted to build that relationship.
Yeah.
Fast forward 6 months later, dude, I'm loaning him $75,000 on another deal because I trust him.
Yeah.
Of course, you still underwrite the deal. Dude, the deal was a screaming deal, and he gave me everything that I wanted, collateral here, collateral there, blah, blah, whatever, right? Because he believed in the deal, paid for everything. I didn't come out of pocket.
Yeah, and I think it's important, right? Of like, hey, I could cross collateral to 5 other properties are way more, is worth way more than what I'm gonna give you. But because I know this deal and I want you to feel safe, here, I could cross collateralize all these properties, right? Yeah. And I think that's kind of like I think for that, like getting to the point to where building that relationship is key, right? Because for me, it's like, hey man, I honestly, I just want to do multiple deals with that one person, then go seek for my next deal or whatever. So
yeah, man, because it takes time.
Yeah, it takes time, right? Like, dude, are you going to get 30%, 40%, 50% every single time? No, like, right? You're not going to get like, and I'll be the first person to tell you, getting 50% every single time, or 30% or whatever the case may be for that short term, like the transactional funding side, like I'll tell you like a quick story, right? Like I was doing a whole bunch of EMDs, right? with different people, and we worked out a deal. So let's say it's 25% for 30 days, but you're out of the 10 transactions that you funded, maybe 3 close and 7 did it. So your money that's tied up, obviously there's stuff that lose it, right? Paperwork and things like that. But for me, I saw it out there. Well, why am I funding 10 deals where only 3 are actually closing?
Yeah, crazy.
I mean, am I still making great returns? Yeah, I am. But I could put the other funds into somebody else's deal that it's gonna maybe give me a lower return, 10, 12%, whatever. It's I wouldn't say guarantee, right? Because everything has a risk, but it will give me
you're most likely to get a return.
Yeah, but my money's not tied up every single time, and not like and maybe 30% of that is closing.
Yeah. So, it's true, man. It's true. You're definitely true. I haven't done any EMDs. Definitely would like to talk about that, off camera, so you can help me understand a couple of things about that. My lending experience is more so long term, a year, 6 months and stuff, right? But okay, man. Listen, man, I thank you for being vulnerable, because like I said, not many people want to share the ugly. Not many people want to share the ugly, but I think that's where the gems are. So thank you for sharing and being vulnerable. So, what the next question is, what is your Mount Everest? Pace has got us, talking about our Mount Everest, right? And it's cool, right? But the shit is scary. It's scary.
Yeah. What is my Mount Everest? So the funny thing is, what am I doing now has nothing to do with my Mount Everest. So what do I mean by that? So the lending that I do, the stuff that I do as far as my active income, I right now in my part of business, I have a few active incomes that I have that are holding me back from my Mount Everest. But to answer to give you an idea of what my Mount Everest is, this, man, is to help other firefighters see that there's opportunity out there, that we could build some type of generational wealth for our families. At least a lot of my coworkers, again, we love what we do, and I'm sure you love what you do as being a firefighter, being a servant.
Yeah, man.
All that stuff, right? Like, we love going to fires, we love helping people. But for me, it's like, who's gonna help us, right? Like, day in, day out, we go out there, we do our thing. But at the end of the day, who's there to help us, right? So for me, if I'm able to help 10% of my colleagues, as far as, look, this is what I'm doing, this is how I am generating $10,000, $15,000 a month currently right now to build my generational wealth or whatever. If I could do that, I think I'll be successful as far as teaching other people and teaching them what I'm doing as far as like affordable housing, or how to even get to investing, or how to leverage your pension, your deferred comp, whatever that case may be, so you could have the money work for you long term, right? But the bigger vision that I have for my Mount Everest is that in the fire service, statistically, we have the highest divorce rates, right? Highest suicides in the fire service, and also in the law enforcement too. So this will go for any first responders, right? Within the last 3-5 years in my department alone, I think I have experienced anywhere from like 3 to 5 people that either suicide or they retired and man, they were gone within like a month or 2 of after retirement.
Yeah.
So if I'm able to help other firefighters to invest and be like, hey, you could,
have passive income.
Instead of working overtime, well, you could do this, and that's gonna pay for like.
Yeah, no, it's true, because a lot of us have, I remember when I first started, I had to have a second job. Like, it's not later on in your career where you're like, okay, now I don't have to work a second job, right? But dude, I remember having to freaking, rub dimes together. It's like, yo, like, how do we do this? Having a family, having kids, shit puts a strain. I mean, I wasn't married, but I got separated. You know what I'm saying? I'm like, yo, this is wild to me.
Yeah. So I mean, and again, I didn't know that about you, but again, for us, it's like we're just, it's statistically, right? Numbers show that, and we have one of the highest divorce rates, separations, suicides. We have high probability that we're gonna get some type of cancer or whatever, and and
To
you
touch
don't
that,
think
to touch a little bit on that. I'm sorry to cut you off because it's just, it's recent. We just had a buddy of ours take his life. And we learned, and I don't want to get the statistic wrong, but it's fucking high.
Yeah.
It's either 1 out of 4 or 1 out of 3 firemen.
Yeah.
That
crazy.
That contemplates suicide.
Yeah.
And then I learned that shit never goes away.
Yeah.
I'm like, what? Yeah, it never goes away.
Yep. So for me, like, that is my vision, right? Like, to help firefighters, whether, again, first responder, and I would just say it as a first responder, right? I think if I'm able to show them, for whatever reason, like, hey, this if I did it, and I am not the smartest, and I'm the smartest tool on the tool shed, right? I'm just a regular person, but if I know I could do it, anybody else can. And what I want eventually, right? What I think it's going to take me about 3 to 5 years to accomplish this, but is to be able to have like a couples retreat, right?
Oh, that's what's up.
To go like some type of destination once or twice a year, right? Some nice destinational place where I could, for them, right, to have time or like to, just couples kind of reconnect together, right? I think that's highly important because, again, you go back to the grind of working 10, 12, 15 days a month.
Dude, you were gone for what, 2 weeks, right?
Yeah.
You were just gone for 2 weeks.
I was, on this last one deployment, I was only gone for 7 days, but the only reason I came back was because I got sick. But for, smoking all that or inhaling all that stuff, right? But this last summer, I was literally gone. The first deployment, I was gone for 10 or 11 days. I came back home for 2 days. I was gone for another 14 days. I came back for like a day, and then they told me to go out for another deployment for the hurricanes, to go to the Carolinas. And I was like, hey, time out,
Yeah,
like,
my wife's gonna kick me out.
Yeah, like, I would not have a family
Yeah.
if I get this deployment,
Yeah.
So again, I think it does, like I said, we love I love what I do, but
Me too, man.
there's a balance, right? And I think, having that balance is important. I think having some type of reconnection with your partner is important. And, is it easy? Probably not, because we experience a lot of stuff, right? I think as a firefighter, we experience a lot of
See a lot of death, a lot of bad stuff, man.
Yeah, a lot of accidents, a lot of fire. Even now, I mean, I have a 15-month-old daughter, and I have seen personally a 15-month-old daughter that we couldn't bring back to life, right? That is traumatic, for people, right? So all this stuff, right? And we're talking about like suicides. We're talking about
years of accumulation,
right? So if I could provide a resource or something to and I want to start locally, and I eventually make it huge, where I want to have it available to partners, other fire service or whatever, military, all that stuff. So to provide some type of service for that.
Well, listen, man, I think this is the beginning for us, because that's not my Mount Everest, but I definitely is something that it's in my heart to do as well. Right now I'm trying to teach my guys and stuff like that what I'm doing, and they got questions, and of course a lot of them are like very like scared and skeptical about it. I'm like, listen, man, I get it, because I was there too, So in any way that I can, count me in. I'm there to help. Cool. You know what I'm saying, you want to go sit there and you want to talk to these guys, let's do it.
Yeah.
Because I definitely think it's definitely needed, especially in fire services, because not all fire services are the same. Not all of fire services get to make a decent living. Mm-hmm. But 75% of the fire service is volunteers.
Yep.
So, those guys definitely need to know some of this, to learn some of this. How can you actually do this? And it's not, dude, we're just regular people.
Yeah.
Yeah. I'm not any smarter than you, and I'm doing it. And making some good returns on it. Definitely making better returns than, the 401k in the market, I'll tell you that.
Yeah.
So, dude, I'm so glad that we've met. So glad that I can call you a friend. I thank you for being here, and that we actually get to go on this venture together, man.
Yeah, man.
I think it's super
this
dope.
is just the beginning. Yeah.
Facts. No. Yeah. Okay, so how can people get a hold of you?
Yes. That's one of the things I am working on, unfortunately. But yeah, I mean, people can reach me on my social media, probably Instagram, Jesus_Padilla 11. I think that's my Instagram. So they can reach me out there. But, I think that's probably one of the things I need to get better on, because I do want to be able to start that journey with my Mount Everest, but like I said, there's stuff that I have to keep working on myself, as far as, so I could start.
Yeah. I mean, it took me some time to, I'm better at it now. I got some cool lights in the back now.
Yeah. I mean, this is just, as you can see, this is my made engineer, and then this is all the stuff. I mean, because I used to work for the Forest Service back then. I used to work for a whole bunch of agencies back then, and man, it was I was all over the west side when I worked for the U.S. Forest Service.
What's up, bro?
Yeah, LTAC crew. I mean, dude, it was awesome. But
so the next podcast I do, I'm gonna be in my room. I actually finally got it done. I just wasn't able to get it set up for this one.
Oh, you're good.
Everyone's looking at my bed all the time, like, yo.
Yeah, no, it's all good, man. I think I think from all sorts of walk of life or whatever, I think people would learn from you. I think that you're a great resource. I think, however, your background, it should be way less important. Like,
I feel you, bro. I feel you. But anyways, Jesus, man, listen, man, it's always awesome hanging out and rocking with you. All right, brother. You have a good night, and we'll connect, man.
Sounds good. All right, brother. Thank you. Thanks for having me on board.
Later.